Is gold dead? Are you saying it's now going forward, it's no longer an asset?
Yeah, gold's dead money. Sell your gold, buy Bitcoin, because other people are going to sell their gold. And if you wait until you've been front run by all the hedge funds, when they dump their gold, you're going to be the last person out.
You've been critical on 2020 gold's performance. You said this should be the breakout year, and you said that's what convinced you that it was Bitcoin, that it did 300 some percent, gold did 15%. Is gold dead? Are you saying it's now going forward, it's no longer an asset?
Yeah, gold's dead money. Sell your gold, buy Bitcoin, because other people are going to sell their gold. And if you wait until you've been front run by all the hedge funds, when they dump their gold, you're going to be the last person out. I think gold's getting demonetized. That is, I mean, like being demagnetized. It's like there's $10 trillion worth of monetary energy in gold right now. Eventually, it'll only be the central banks that'll want to hold it. I mean, every private rational actor is going to move out of it and move into Bitcoin. What is it good for? Well, I mean, people held gold for political unrest. Lord knows you got enough of that this year. They hold gold as a hedge against money printing. We got a lot of that this year. Why hasn't gold tripled? Gold had a slight bounce up, but look at every asset class for the last 6 months. Look at gold, look at NASDAQ, look at S&P, look at bonds. They're all chopping. They're not going anywhere. What's working? Bitcoin's working. It's tripled or quadrupled, but let's say tripled easy. Square is working because Square plugged into Bitcoin's network. Square lets you buy Bitcoin on a mobile app. PayPal's working because PayPal's plugged into Bitcoin. It runs on a mobile app. Grayscale is working because they plugged their mutual fund or their investment fund into Bitcoin. Things that are plugging into this digital monetary network are working. Things that are running on top of traditional fiat euros and dollars, they're chopping. And then, of course, if you're unlucky enough to have companies or investments in Venezuela, Argentina, Lebanon, Turkey, South Africa, fill in the blank, they're not working at all because the currencies are collapsing. And no company can be successful, no matter how competitive it is, if it's generating revenues in a currency which is collapsing or weakening. And so that means none of those stocks are going to be a store of value if their currencies don't hold value. You're swimming against a 15% annual monetary inflation current, which is in your face. It's a wind blowing in your face right now.
So let me be the devil's advocate, because I asked some folks in the audience, what should I ask Michael Saylor? They said, well, what's your argument? You see Russia, you see China, you see all these sovereigns, they're stockpiling gold. Are they going to turn to stockpiling Bitcoin? What happens if they create their own? I mean, what is your response to that point?
Governments will be the last ones to make this decision, but every rational actor will move before the government. So Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, Rick Reeder, who works for BlackRock, Guggenheim, Skybridge, my company, Square. You're going to see an avalanche of smart money in the investment community, and you're going to see an avalanche of smart CEOs, and you're going to see high net worth individuals. Boy, it's like, you can have your gold. This year, you got 18% return on your gold, but if you bought Bitcoin, you got 290% return on your Bitcoin. Okay. That's been going on. It didn't happen this year. It's been going on every year for a decade. Bitcoin's running 200% on average annually every year for a decade. So I guess my answer would be, how many years you have in your life? Because if I show you something that's doing 200% a year and the average thing is doing 10% a year and the best thing did 20% a year, and you wait 5 years, you gave up 5 out of 30. You wait 10 years, you gave up 1/3 of your life. You're going to wait 15 years and give up half your working life? Do I got to do it for 30 years before someone actually says maybe it works? Gold is antiquated store of value. It peaked in the 19th century. It's not working. You can see it's not working. And the reason it doesn't work is because you can corrupt it, you can confiscate it, you can hypothecate it and lie about it, and try moving $100 million of gold or $10 million of gold through an airport when you decide you need to change jurisdictions, or when a country decides to tax it. How are you going to move it? It'd take you a year and have hundreds of thousands of dollars. So gold is this 5,000-year-old idea of a bearer instrument of value or apex money. If everybody in the world with money agreed they were going to use gold, the gold standard, it might sort of work, but it's too slow for the 21st century, probably too slow for the 20th century. So people moved away from it, and we've replaced it with something better, moves at the speed of light, that you can program. Smart money, pure monetary energy. You can cling to your gold, but it's like clinging to your Kodak stock because you like photos instead of buying Apple. It's like clinging to Rand McNally maps instead of Google Maps. The digital version is going to be 100 times better. And there's just you can cling to your horses when the automobile comes along. It's not a speculative asset. It's a digital monetary network, which is 1,000,000 times better than the physical monetary networks and the paper monetary networks it's replacing. So if you ignore it, you're kind of like ignoring running water and electricity and railroads and airplanes. It's technology. It's the future.
You described some basket case economies. Do you think there will be another gold confiscation or some kind of confiscation where the government comes in and just takes people's assets, whether it's gold or anything else?
I don't think there'll be confiscation like 1933, at least not in the U.S. I mean, I can't speak for every country. I do think some countries, like China, they're a little bit threatened by capital flows. Zimbabwe, when their economy collapsed, they didn't want people to be able to buy Bitcoin. If countries in a country where the economy completely collapses, they will probably be concerned about capital controls, and there'll be various regulations when you have a currency collapse. In Argentina, we had there are quasi capital controls there about how much money you could move out of the country, and so those happen from time to time, and we'll probably continue to see those. But in general, I think that more likely gold is just going to be passed over. It's $10 trillion right now, and it's seen its height, and it's probably going to peak and deteriorate by $1 trillion a year or something like that for the next decade. It's seen its best years. Bitcoin is going to grow past $10 trillion and then 20, 30, 40, 50, 60, 100 trillion, I think, because it is the digital monetary network, and half of all the money on earth wants to be in a monetary network. We're looking for a store of value for half of our monetary energy, and currencies aren't working. Gold is not working. Index funds aren't working. People, as soon as they start to realize Bitcoin works, they're all going to jump on it. And how fast? Well, the thing's growing 200% a year. You can't grow much faster than 200% a year, I would think. So it's going pretty fast. At some point, the Bitcoin will be wrapped in a regulation that's at parity with the regulations that control cash, bonds, stocks, real estate, AML, KYC regs. I don't see that as being a problem. It's probably a welcome thing because institutions and corporations are going to funnel 10x and 100x as much money into it as it normalizes in that way to parity with stocks and bonds. So that'll probably happen.
Yeah, that's one question I wanted to ask you was, you seem okay with the regs, because a lot of the early crypto adopters, let me ask you that, the folks who got it in 2013, you've said that they were pretty courageous, as I recall. How does your view differ from their view? How do you look at the delta between getting it in 2020, getting it in 2013?
Well, you have different factions, and there's a dozen of them. If you're a crypto anarchist, then you're not really all that excited about government in general. You don't like any laws. You're not a big fan of taxes. People say inflation is theft. Austrian economists think inflation is theft, but I've heard people say taxation is theft, right? A perfect libertarian. So if you're an extreme libertarian or anarchist, maybe you don't like government, you don't like taxation at all. They're really fixated upon privacy and no AML, KYC. They don't want to, they want to trade through decentralized exchanges anonymously, right? That's an extreme. On the other hand, Mass Mutual, a big publicly traded company, they're not buying it for that. They simply want an inflation hedge, or they might even not look at it as inflation hedge. On that extreme, they might just say it's an uncorrelated asset, which is doing really well. Like if I'm just a macro trader, I might just say I'm going to buy 2% of it because it goes up 200% a year. It's uncorrelated asset, helps my portfolio. Then you've got people that don't really care for inflation, right? They want to preserve their family's wealth preservation or wealth creation or treasury preservation. For them, they need to buy it on a regulated exchange and keep it with a regulated custodian. A public company can't. It's like, we're not going to buy it on a decentralized exchange and store it in a private wallet that we take home at night, right? That's not happening. So those companies are looking at it as a treasury reserve asset, and they have a different view. I think in general, 99% of the money in the world, maybe 99.9% of the money in the world, probably wants to be in a regulated environment at parity with other regulated assets. I mean, they're comfortable with that. And so the future of Bitcoin is going to be determined by those actors, by the institutions, by the corporations, by the high net worth individuals within a given standard AML KYC framework.
How can Nomad Capitalist help you? 4 ways. Number 1, subscribe to our channel and click the notification bell to make sure you get our new video every day. Number 2, get a copy of Nomad Capitalist, the book. You'll learn a lot of my personal experiences over a dozen years of studying this stuff, as well as exactly some of the strategies that you can use to build your Nomad Capitalist plan. Number 3, if you're not sure where to start, but you want to come and learn from my team and I, you want to come and mingle with like-minded people, learn more about our live conference, Nomad Capitalist Live. It's coming up soon. And number 4, if you want some help right now because you've got a burning issue, you need something solved, you want to lower your taxes, get a second passport, or build the Nomad Capitalist lifestyle of your dreams, go to nomadcapitalist.com and click on Become a Client.